Currently, only 33 of Africa's 54 countries are rated. But lamentably, of those 33 that are rated, only two are investment grade, are rated as investment grade. We have Mauritius and Botswana. 31 are non-investment grade, which means that most investors will think twice about putting their money in these countries, or even if they do put their money in these countries, it will be at a high cost because they're deemed as being more risky. Some people call them junk bond, junk status, or non-invested. The rest do not and have not been rated as yet. Usually, investors would look at non-rated countries and say, maybe there's a reason why they're not rated. The rating scale is gradated from AAA down to D. That means between AAA and AA minus, that's high grade. Those countries would receive the most investment generally and at the lowest cost. Then you have the triple B to triple B minus. That is the lower medium grade. Everything below that is non-investment or speculative grade, or some people call it junk grade. Mauritius, for instance, is triple B minus, which means it's just investment grade. So even though it is investment grade, it would not have the same terms as a country that's triple A or double A. In Africa, over the last 3 years, the average cost of borrowing is close to 10%. In Germany, it is 0.75%. And so we see these differentials as not just problematic, but also as barriers to the resources that Africa needs to invest in things like green transitions, to invest in energy security, to invest in infrastructure that connects countries both physically and digitally, because these are things the continent needs if it's going to fulfill its potential. We have to focus on how do we address these issues, either by pointing out flaws in the methodologies of the credit ratings agencies. At UNDP 2 years ago, we did a report that highlighted some of the inherent subjectivity in the methodology. And this subjectivity, in our estimation, for 19 African countries cost $74 billion. And $74 billion is a lot more than the entire continent receives in development assistance in 1 year. The African Union has been very outspoken in its need to address this. South Africa's G20 presidency is also prioritizing this conversation because the continent needs the red flags the least. Because for the next stage in the continent's development, we need massive amounts of investment. The gap is roughly about between 200 and $300 billion a year. That's not going to come from development assistance or aid. It's going to come largely from the market.